Hello and welcome back to Business Matters at the Hindu with me, K. Bharat Kumar. Since January 24th, when Hindenburg Research released a report alleging that the Adani Group had indulged in stock manipulation and other misdemeanours, a lot of water has flowed under the bridge. Typically, when these such allegations come out and they tend to impact stock prices of companies, and these companies tend to find that their ability to raise funds is impacted, cost of funds go up and so on. As a result of which, growth plans and plans for capital expenditure, all of these have to be pulled back by these companies. And sure enough, the Adani Group is said to have cut back on its growth estimates for the coming year from 40% to about 15 to 20%, according to a Bloomberg report. The report also added that the company is cutting back on capital expenditure plans to help conserve cash. You may recall that in an earlier episode of Business Matters, we cited Adani Group CFO saying that if the Adani Enterprises follow-on public offer or FPO of Rs 20,000 crore did not go through, then the group would indeed have to defer its capex plans by 6 to 9 months. The FPO actually went through thanks to institutional investors, but the Adani Group withdrew the offer, saying that it was doing so to protect the interests of the investing community. Let's see how else the Adani Group has reacted by way of corporate actions and what else has unfolded since January. First off, the group has held back from aggressive expansion, especially via acquisitions. It has officially withdrawn from acquiring the assets of DB Power for about Rs 7,000 crore. This is the power arm of the Dainik Bhaskar Group. DB Power has 2 into 600 megawatt of coal-fired power plant in Chhattisgarh. Adani Power is said to have eyed the assets to help expand its presence in the state in the thermal power sector. DB Power, which recorded revenue of Rs 3,488 crore for FY22, has long and medium-term power purchase agreements for 923.5 megawatt. It also has fuel supply pacts with Coal India. A fortnight ago, Bloomberg said in a report that the Adani Group had stepped back from its intention to buy stake in state-owned Power Trading Corporation of India. Citing sources, the report said that NTPC, NHPC, Power Finance Corporation and Power Grid Corporation were looking to sell about 4% stake each. A 16% stake in PTC would have cost about Rs 400 crore. This is based on prices prevailing at the time of writing of the report. What has surprised industry watchers is that for a group that had spent tens of thousands of crores of rupees on other acquisitions, a Rs 400 crore acquisition has suddenly become a no-no. The government has been looking to divest stake in Container Corporation of India, and the Adani Group was said to be the front runner for the sale, but such an acquisition is likely to be placed on the back burner for the group now. How have other relevant entities reacted to Hindenburg's allegations? Global rating majors, Moody's and S&P, have lowered their debt outlook for some Adani firms from stable to negative. What happens in such instances when ratings go down? Perception of risk for lenders goes up and hence borrowing costs for such companies go up. Morgan Stanley Capital International said that it would change the weightage accorded to 4 Adani Group stocks in its index, the MSCI. Later, it said it would defer action on 2 of the 4 stocks till March. The Financial Times Stock Exchange also said that it would review the weightages accorded to Adani Group stocks in its various indices in March. What consequences do such moves have? Let's take an example here. When an index changes weightage to a certain company, say ABC Corp, from 10% weightage to 8%, a global fund manager that runs an index fund would also change weightage accordingly in his or her portfolio. So they would sell 2% worth of stock if the decline is from 10% to 8%. So the sale of such stock in the markets would result in a decline in the share price. So after the MSCI announced that it would indeed change weightages for some of the Adani stocks, Hindenburg Research's founder Nate Anderson tweeted claiming that this move was a vindication of the claims made in Hindenburg's report. One of the other things that the Adani Group has done is to free up promoter shares that had been pledged against loans. The Adani Group promoters had announced payment of $1.11 billion to release the shares in group entities Adani Ports and Special Economic Zone, Adani Transmission and Adani Green Energy. In a statement, the group said, in light of recent market volatility and in continuation of the promoters' commitment to reduce the overall promoter leverage backed by Adani listed company shares, we wish to inform you that promoters have posted the amounts to prepay $1.11 billion ahead of its maturity in September 2024. The impact of Hindenburg Research's allegations on Adani Group stocks has been the most talked about. It has grabbed headlines all over. Last week, the combined value of listed shares of the Adani Group fell below $100 billion. In about a month, the conglomerate has lost $135 billion in market capitalization. Here's what is significant. In its January report, Hindenburg Research said that the Adani Group stocks were significantly overvalued and said that they had potential to be valued much lesser, by about 85% lower was its claim back then. At about the 1 month mark, here's how Adani Group stocks have fared on the stock exchanges. In a slide on your screens now, you'll see how share prices have changed over the month. Adani Enterprises lost more than 60%. Adani Green Energy shares plummeted 75%. Adani Ports and SEZ, not so bad, lost only about 27%. Adani Power at 46%, Adani Transmission at 74%, and Adani Total Gas at 80%. That's all we have for now, folks. If anything significant happens, unfolds, be sure we'll bring it to you all. Till we meet again next week, have a lovely time ahead.